So where do we start? Well, if you take a look at my screen, you can see I got $750,000 with TopStep. These are 150k Express accounts, 5 of them. You can see the Express there. So they are real tradable accounts that I can make money from. Now, how did I do this? It's actually simpler than you think. Firstly, we need to talk about mindset, right? Successful trading is not hard, nor is it complicated. But you, the guys still failing challenge after challenge, I know it's you. You have a more complicated strategy than me. How does that make sense? How can I withdraw money from the market, 6 figures this year, get $750,000 worth of funding, yet you have a more complicated strategy than me? How does that make sense? But first of all, I get it. I understand where it comes from because this was me as well. If you take a look, these are screenshots from years ago. This is 2021 in my uni accommodation where I was literally just picking up trading. I was studying charts, making a lot of notes, doing so much more work than I do now. So much more work in the wrong place. That's the key. Watching Swaggy C, taking notes. Canon event, right? I think everyone's watched these videos. We all know how this goes. No one has become profitable doing all of this nonsense. This was 4 years ago, right? In my uni accommodation where I was just grinding, working so many hours, so hard on this. So how did I go about changing this? The answer is one candle, all right? This is the first step. More specifically, predicting the very next candle and nothing else. I've highlighted nothing else here because, again, ICT traders do too much. You don't need anything else. If the next candle is predictable, the next candle, not the next 5, I don't care what price is going to do afterwards. If the next candle is predictable, then you have the first step complete. Predictable, you have a trade. Unpredictable, walk away and literally do anything else. Doing anything else when the next candle's not predictable is more productive than being sat on the charts. So we'll take a look. This is a NASDAQ daily time frame. We traded into a discount fair value gap and we have buy side liquidity up here. When we have a stop run here, this candle's predictable to me. Why is that? Because we're trading away from a discount gap. We have buy side liquidity above us and now we are trading higher. So this candle is predictable. When it takes out previous day low, are we worried it's going to go lower? No, because we still have buy side liquidity above us. All right. Now it's predictable, so you have a trade. Now I always get asked, Loz, how do I actually engage with that candle? Well, you only need stop runs to engage with this candle. Any stop runs inside of this predictable candle, you have a trade. If the 4-hour candle, if you are predicting the next 4-hour candle, look for M15 stop runs to engage with this. Very, very simple framework, guys. You do not need to overcomplicate it. Again, I got all this funding and all this money from prop firms by trading a simpler strategy than you trade right now. Very simple framework. Then for your entry is a simple change in the state of delivery on the M5 if you're predicting a 4-hour candle. So what does this actually look like? If we go down here, this is a 4-hour candle here. 2 expansion candles on the 4-hour. Why is it predictable? Well, we're in a bullish market long term, right? But you're not worried about that. You're predicting the next 4-hour candle and the 4-hour candle only. Well, can we say this expansion candle is going to be a bullish expansion? Yes. Why? Because this is a down close candle in a bullish market. The 4-hour trades into the down close candle. The previous candle also closed above the body here. So this is a reactive price level. When we go into this, you can see on the lower time frames, the M5 stop runs are literally all you need. We'll dive into trading view straight after this and I'll show you exactly what I'm talking about. If you look at this chart here, this is the M5 on that 4-hour candle there. Any stop run inside here is the only thing I'm engaging with. The only thing. I don't care if I've missed half the move. I do not care. When we have a stop run, this becomes a trade for me. You take a look, we've traded into the down close candle, which is this line here. We trade away, and then finally up here, we get an M5 stop run. Now, because the buy side liquidity up here is still intact, this candle is still predictably bullish. I spoke about this in my free course recently. Just predicting the next candle. If you guys want the free course, it's the top link in the description. Now, you're only trading M5 stop runs towards the buy side liquidity. Until we take out your target, that candle's still predictable. So guess what? You still have a trade. All right. Any M5 stop run, how do we engage with it? Well, you look for a simple change in the state of delivery, which we get there when we close above these down close candles here. Then you would enter with your stop loss below there. Let's dive into TradingView. I'll show you some actual examples of this in theory. If you take a look, we are on the 4 hour on NASDAQ. And why is this, to me, still a predictable candle? People might say, well, the buy side liquidity above here got tagged. That's a shallow run. That's a shallow run in a long-term bullish market. That means there's still buy-side liquidity above these highs. Why? Because it didn't get absorbed long enough. So institutions still need to offset their offside positions to relevant sellers. So why is this candle predictable? Well, again, building the framework, we're coming away from a stop run on the 4 hour down here. You have a 4 hour fair value gap there, which we trade into, trade away from. You also have a 4 hour fair value gap here after a small shallow run into the buy side liquidity. So we can still anticipate a deeper run into that buy side liquidity. So again, it's the same thing over and over again. How do we engage with this 4 hour candle? If I drop to the 5 minute time frame, you'll notice something about this 4 hour candle. You notice something in every 4 hour candle. Here, delineated by the line, is that 4 hour candle we're looking for. You have a low, we make a lower low. What is this? What's happening here? M5 stop run, okay? Then what? Change in state of delivery. Look at the down close candle that created the M5 stop run. If you take a look at the down close candle, it literally was the one that traded into that sell side liquidity. We close above it and use it as an order block. That is all you need for an entry. As soon as you get a stop run within that 4 hour candle that you're predicting to be bullish or bearish, after the CISD, you have an entry. That's all you need. Again, it comes down to, why is your strategy so complicated when I have such a simple strategy that literally prints me money on demand? Why is that? You have to ask those questions. We also have relevant buy side liquidity and failure swings above us, which makes it really easy. Well, what's this as well? An M5 stop run in the same 4 hour candle, because this 10 to 2 would be a 4 hour candle. When does this happen? At the bottom of my screen, you can see 10 past 1. That is still a predictable 4 hour candle. Soon as we close above the down close candle here, we get a trade on this spike higher. If you missed it, there's a fair value gap there. Use some logic, okay? Why? Because the buy side liquidity above here is still intact. And all you need to do is be able to predict that 4 hour candle. Like I said, guys, all right, I speak about this in my free course all the time. If you want my free course, it's completely free, 6 hours worth of content. Go and grab it from the top link in the description. But anyway, how can I have such a simple strategy and withdraw money from the market? Because I know when I'm going to trade. I'm only going to trade when that 4 hour candle is predictable. So when it's predictable, I'm looking for a very mechanical thing to happen. That's why my trading's easy. That's why trading can be easier. That's why so many ICT traders overcomplicate their strategy. You only need to take the good things in what he said and actually apply it. Apply this and you will start to make money in the markets. If you enjoyed the video, I want to keep it short and snappy. If you enjoyed it, please do drop a like, drop a comment with any feedback. Thank you as always for watching, guys. I'll catch you in the next one.